We have a special podcast here today. Another one. We had the Squad Up Summit, I don't know, last week or a couple weeks ago. You guys heard about that. We had all the hosts on there. And today I have another host with me. My name is Justin Tuminowski. You can find me at realestatejustin.com. Guys, I have the very special Ingrid Hernandez. She's a friend of mine. She's a homie. She's one of the, actually, funny story. She's in Arizona. Every time I go to Arizona, she's there. And we got to go out to dinner one day and I hung out with her. And I think I went on her podcast back when she had one with Caroline Kane. And we went out to dinner and I look over and I'm like, this woman is so hilarious. I did not know how freaking funny she is, how many private jokes she was saying. I'll say, of talking about privates, right? You let your hair down, you were talking about jokes, Ingrid. So I fell in love with you that moment. And I know my wife fell in love with you shortly after that. So thank you for being here and tell us why we're here. What are we talking about?
Thanks, Justin. Firstly, I do want to say, even during the No One Left Behind challenge stuff I do with Pace, I tell the audience, look, man, it's way more fun to think like a 14-year-old boy. So everything becomes a sex joke. Anywho, yes, the reason we're here is because we're going to talk about our experience, or at least my experience at Squad Up, and how we were able to get a deal under contract under the most profound pressure. So, anywho.
So yeah, I was backstage because I had spoken a little bit earlier, I think that day, and I didn't even know what was going on, right? And I see you go up there. Was it Jerry Norton, yourself? Who else was there?
Jamil Damji,
Yep.
and then the head of Lead Zolo. I just don't recall his name.
Okay, cool. Lead Zolo is a company. And so you guys were, you had burner phones. I remember hearing some about burner phones. Brand new phones, right? And I don't even know if they were set up. Is that the joke?
This is part of the problem, actually. Firstly, I didn't know I was going to go on stage until less than a week, not even less than a week that I was on stage. What I thought I was doing is we were going to have like a smaller breakout sort of thing. Like, hey, we're going to call kind of like the round tables that were happening there where everybody had a table. So you're going to have maybe 20, 30 people around you, and you have to be ready to show them how to make a call. That is what my brain was expecting when Saravi, the gal who works for Pace, was telling me that we were going to call leads. And I was like, cool, we're going to have like this like small round table. We're going to show people how to call leads. And for the record, I started by doing direct to seller, meaning we would market to sellers and I would call sellers after a cold call had already happened. A lot of cussing at you, a lot of stuff still like that. In fact, I got cussed out of this past week actually from a seller, but I had not done a direct to seller in 3.5 years, as in no relationship connected me to the seller. It was me and the seller, right? And so that was also another nuance with these leads, but I was like, let's go. Like, what's the worst thing that's going to happen? They're going to take my birthday away? No. I mean, I always say that, right? Like that's the kind of attitude you have to have. You have to have that. I'm not saying I'm a hot girl, but you have to have the hot girl attitude when you're talking to sellers, because you have to know that your worthiness is way more than whatever they're going to tell you on that phone. So yes, I didn't know that. So that was the first part. And then the second part to that was that these phones were brand new. So there's 3,500 people or so staring at you. My hands were clammy, so they were sweaty. My hands never get sweaty. I'm a dry bird over here. And me and Jerry were sitting on stage trying to make the next call, but the phones kept wanting to set up the accounts when you set up a phone for the first time. And we were trying to clear all the things we possibly could while we were up there and not talk about it, right? We had to keep the show going because we were on stage, and I think we were only supposed to be on stage for 12, 15 minutes or something like that. So we had to be quick about it. And I because we were prepping to go on the platform, I did miss the last, third of your speech, but I was so happy to see you up there, by the way, Justin. You were killing it. You had the crowd into your story. It was so, so good. And I felt bad that I couldn't see the last portion of it because I had to go backstage.
Yeah.
So it was super cool to see you up there.
Thank you. Yeah, you're next year again. So I want to see you up there. And thank you. It wasn't the 3,500 people either. I understand the clamminess. I understand maybe there's almost like blackout. For me, maybe it's adrenaline. I think that happens. And after I was done, I go, maybe it was adrenaline that you start to forget almost. You almost go I think when you drive, right? When you ever driven and you go, how the hell did I just get here? I forgot the whole ride, right? I don't know. Sometimes there's different meaning. There's different ways
I
for
guess
that, but
better than pretending everybody's naked. That's a lot of naked people
that's
out
a
there,
lot of naked people. Well, that would make me like a 14-year-old boy. I might not want to think like that because that's usually my mentality. But no, I appreciate you so much. Thank you. And I wasn't, yeah. So I was going to say, it wasn't the people even, it was just making sure that you deliver, right? And I think
Yeah.
that's for you is you want that phone. It's like, oh crap, objection or hurdle. Got to jump this one. You're not answering. It's ringing. We have dead air right now. Boy, this isn't fun. And you want
Trying
to
to crack
provide.
jokes.
Yeah. So we got to tell pee-pee jokes. So
Yeah.
I think that's probably a lot of it too. And I know that's what you want to do because that's where, you're always on Pace's channels and No One Left Behind. You're on YouTube. Like, gosh, people are counting on you. So
Mhm.
thank you for that and good job. But you guys locked up a deal.
Yeah.
All right.
So the seller that I reached out to on stage, and to add context, we had no idea what the motivation was or what the, we'll call it, debt structure of anybody who was calling us. So the seller I called had a mortgage property out in Little Elm, and we're still selling it, by the way, but I'll add more to that. And then Jerry's call was somebody, a cash offer out in Colorado. So the other element to this is we're calling markets like we never even call on. I don't call on Texas per se, unless a Subto student already established relationship and they need me to be involved. But so I called the seller right away. I knew that this was my people. So the seller is actually a software developer. And for my last 20 years of my corporate life, I've been working with more technical folks. So my job was to bring the business voice. So understand the business interworkings, the governance, like the data management of it all, and go to my nerds, as I lovingly call them, and tell them what that part of the business needed so that the actual technology could functionalize in a way that it would accelerate business. And what we would call it is democratizing data. So the moment that I talked to the seller and he told me what he was, I was already cracking jokes because these are my people. I know how to speak with folks who are, in my perspective, a lot of our more technical people, I think their intelligence can intimidate people and therefore they don't get joked with. They don't get included in a lot of the funniness that we have. And I go the opposite. I try to connect with people on a different level. Of course, I wanted him to know that I had credibility of who I was right away. And I did that. And so I built rapport really, really fast. And that was what was really cool about that call, because I was like, oh, these are the types of folks that I would talk to every single day. So God works in mysterious ways where he blesses you. And he could not have blessed me with a better lead when it was such a public display of creating rapport. So I was already cracking jokes up there. I don't know how he couldn't hear, but I don't know. Like he couldn't hear everything else happening in that room, which was good because I did have people laughing. You could hear them. And I wasn't sure. He's probably like, is that a laughing track back there? But his situation is that he is moving. And as you and I know this in this business, Justin, like there's things that will happen no matter what. People are like, oh, how's real estate doing? I'm like, real estate is always doing. These folks needed moved from Texas to New Jersey. So I was also cracking up Jersey jokes as much as I could, and respectfully.
Mm-hmm.
And then we have him under contract right now because he is in a very motivated state where we are structuring it in a way, in my opinion, that allows somebody to still buy the property for less than they would have if they were to go get a new loan with a lender. And because of the combined zero equity portion of this debt structure, that's what actually brings the interest rate down, meaning a portion of it is the loan balance. And then a portion of it is just seller equity at zero interest, and you don't have to pay it for 10 years. So
Amazing.
as a result of that, it actually, once you actually start doing the math, you realize I've just brought the interest rate down on that debt structure because a good chunk of the seller equity is not being paid and it's zero interest. So, if you know anything about inflation and all that means that money actually loses value as far as like what you have to pay the seller in the long run. And the goal is to appreciate so much that it's easy to refinance the seller out.
Good stuff. Yeah, guys, she's talking about a blended interest rate. So you got a 0% and then you have a 5%. Well, depending on the amount of money on each side, you could have yourself a 2.5% interest rate if it was an even debt. If that zero carried a lot of weight, that 0% interest rate had a lot of money on it, equity, and then the other side had maybe just as much, if not a little less. Gosh, you can make yourself now with a 2.5% interest rate across that whole loan. So you
Yeah.
won't get that anywhere else. So that's why
No.
creative finance, and yeah, don't look at just an interest rate going, oh, that's a 6.2%. Now that I can't do it. Well, hold on, time out. Look at it. Look and see what the whole picture looks like. So this is in Colorado?
This one's in Texas.
Oh,
So
Texas.
I actually use Little Elm, which is just northwest of Dallas.
Mm-hmm.
What I will say though, it's still a payment that is slightly above rents in that area. I did hear Little Elm is super hot right now though, because it's like a newer development near Dallas. So there's a lot of newness everywhere. So this house is newer. And because of that, a lot of working professionals live in this area. So one of our strategies is I actually got approached by somebody at Squat Up. Her name is Amanda. She's like, hey, I work for a chiropractor, I believe.
Mm-hmm.
Or some sort of doctor. I don't recall. Let me talk to some of the clients and some of the other doctors and see if maybe we can find somebody who would want this property either for depreciation or because they're looking to move to Little Elm because a lot of people commute into there right now since it's gotten so expensive. So I said, perfect. So that's the angle we're working right now. So if you're somebody who wants to move to Little Elm, I have a really great deal for you. A 3-bedroom, 2-bath that can be converted into a 4-bedroom, 2-bath because of how the layout is. So what else? The payment is slightly above rent. And that's what we are seeing quite a bit right now with a lot of these creative deals. Arguably, we're in an environment that it's never been easier to get creative deals, but it's also because people like Pace socializing in the environment that there's other ways to buy a house other than through traditional means. So what I've done is I've actually partnered with Pace to be able to sell more of these types of deals where we're targeting not investors, but we're targeting primary home buyers. What are primary home buyers? People who just want to find a place to live, mitigate how much they have to put in to buy a house, and they don't generally qualify for loans. So you're talking about business owners who expense the crap out of their taxes legally, their tax liability. And so they don't have enough of the income generation that would allow them to qualify for a loan. So therefore, those are folks that we are finding homes for. And then the other, we just locked up a deal this week for a business owner down in Maricopa who runs a group home. And he's like, I need another house, but I can't go get it traditionally. It's too big of a capital investment. We found him a deal where he's literally 10 grand to buy
Oof.
this house in Maricopa. So we are finding these opportunities for business owners who either need it for their group homes or for their primary home for their family. And then the other types of primary home buyers are folks who have ITINs. Who have ITINs in the United States are folks who have gone through the processes of getting documented. It's just they haven't fully been completed. But once you have an ITIN, the United States of America expects you to pay taxes. So if you have the ITIN number, the United States has declared you technically now documented to a certain degree, and that you promise that any money you make, if you're allowed to make money here, you will pay taxes. So that allows them to buy properties, but because they're not technically a permanent resident yet, usually they're on their way to getting permanent residency, they have limited opportunities of getting lending to buy houses. So we are also serving them as taxpayers that they deserve or should be allowed to buy properties. And so that is also the clientele that we're serving as well. And at the end of the day, we're helping solve a problem, right? This seller that we called on literally got online and said, I need to sell my house right now, and had the motivations to do it. And so we're helping people with their problems, the seller who needs to move and the buyer who's looking for a house because they have limited abilities to go get a traditional loan.
So good. And that's solving the housing crisis. That's solving problems with people getting into another apartments. Sometimes you can't even find, if you can find one, maybe not qualifying. If someone doesn't have a credit score, they're going to get overlooked. If they're on their way to, citizenship or becoming fully documented, but they're not there yet, maybe someone's going to overlook them. So yeah, there's other hurdles that those folks are and also bankable. Like you said, yes, some of the hardest working people in America doing the jobs, but they're not even putting money in banks, by the way, because maybe they don't trust the bank. So they have a bunch of cash and they're sitting on it. And then what better opportunities, but you're still vetting them, Ingrid. You're still putting them through an RMLO and you're vetting them. So it's not like you're just putting some random person off the street. Guys, that's not what she's talking about here. We're talking about getting homestead, bringing people into home ownership with creative finance.
Yeah. So there's two ways that we're vetting them, and it just depends on their ability to pay the down payment. So option one is if they can pay the whole down payment. Traditionally, we would have wrapped these properties so that we would make a difference between what the underlying mortgage debt structure looks like. So imagine a $300,000 with a 3% interest, and the PITI, so the principal, interest, tax, and insurance, or the mortgage payment is, and I don't know, I'm literally not doing math in my head right now, but let's just say it's like $1,800. Unfortunately, those are not things we're finding right now. The mortgage payments are slightly elevated. The interest rates are slightly elevated, maybe 5.5% or less. And so with the affordability crisis that we have today, I cannot wrap that note. It just does not work that way because people can't make those payments. So what we've done is we could wholesale it to them, like your creative financial wholesaling. Now, I'm not saying we're not vetting them. We are. We'll still put them through like what we would do for a typical tenant, where we want to verify income, we want to verify their background. And so we'll have them run through a background in that regard and still have standards of how much they should be making every month. But it is a very, I'll say, light. I'll think of like a Diet Coke or Coke. This is a Diet Coke process for them. And then the full coked out process is to actually go and do a full RMLO. But when we do a full RMLO, the option two that we provide is when we are going to help them finance that down payment. And we want to verify that we are structuring a deal. Will they have to pay more a month? Yes. But we want to structure a deal to know that they can afford to do that and that we're not taking any predatory approach on how we sell that property to them.
So good. And they're getting home ownership. That's the other thing too. It's like people are willing to pay a little bit more, I think, rather they know 100% of that is not going to rent. 100% of that is going towards interest and principal. It's going towards something they're going to then end up having a little bit of a nest egg one day and be able to sell or pass along. The cool thing about being in creative finance, Ingrid, just a little thing that dawned on me is I've met so many people doing lease options and wraps because we have quite a few of them. And I've met people who have bought from us on a wrap, who actually bought their first property ever coming in on a seller finance and or wrap. And then next thing you know, they're buying ours, which is we're 3-5 years down the line from them when they started. This is like the third house they have. And now they're doing it as an investment.
Yes.
So they literally had learned, they came here just to get a home, work, home, better life, got home ownership, then learned opportunity, land of opportunity, and they took advantage of it, full advantage of it. And I was so proud. It was so cool to hear that. So yeah, that was just one of the, that was just a great story. And all right, Ingrid. So now you guys have formed.
If I could just add a little bit to what you just said, because I think you are on the brink of a huge gem. When you do these creative deals with folks, even folks who are not investors, what have you just done? You've taken them through an experience they've never had before and saw it come to fruition. In technical speak, that's the proof of concept. So I bought a house from a seller this past September who was in distress. So he was falling behind on payments. I helped him, yada, yada. Now, 7 months later, he's messaging me. He's like, hey, I'm moving to Reno. Do you know how you bought my house? Is it possible that I could buy a house like that in Reno? And I was like, absolutely. Let me connect you with badass Jen, who's a good friend of mine out here. And she markets in Reno. I'm sure she'll find you something. And that's how I leverage the community, right? I can't do deals in every market. So I've sent him to the right person. But once you've sold these wraps, Justin, or these lease options, you should be exposing those people about these other deals you have, because you've now successfully transacted with them and they're going to want to know, how do I keep doing this?
Yeah. Yeah. Some folks don't, they put their head in the sand. They got there what they wanted and they want to keep going. But others, the ones who are astute, or the ones who go, my cousin needs one, my mom needs one, my grandma needs one.
Yes.
I love that. And then furthermore, it's just the folks it opened up their door now to investing. It literally, like, they go, oh crap, I can do this now. I don't have to just get one. I can buy more. So that is the
Exactly.
really awesome thing. And I also want to say that, yeah, I all too often find out, and I know you've heard this before, when sellers go hear about what we're doing or they're part of the transaction. Now I'm dealing with two properties right now that they're 40-year-old people. It's a place up near me up in the Northeast, but they've moved away to Georgia, and they're working professionals, 40 years old, right? Just like me. And they go, holy moly, like, where was this? And I know you've heard that before. Like, where has this been my whole life? So I go, guys, I want you to take this, what I'm doing for here, solving a problem that you have a house that's not even, you're 1,000 miles away from. We're going to resolve that. However, why don't you start doing this too? Like, just know that this is a possibility down the road for you. And they were like, 100%. So
That's how I sell agents too. Like whenever I'm talking to an agent, I'm like, guys, I've built my portfolio doing this and you've never heard of this. Let me help you help yourself.
But hold on. So time out though, Ingrid. I also want to touch base, or actually you want to touch base. Let the audience about how to be careful though on some of the fool's gold you might see out there where you can get yourself into trouble. Do we want to talk about any of that, about like mortgage rate, like buying everything? There's a lot of deals out there. You alluded to that earlier.
Oh yeah.
So do we want to just highlight a little bit of, I call it fool's gold, because everyone goes, oh, it's a Subto deal. It's got to be good.
Yes, absolutely. I do want to be clear that a lot of deals that we're getting under contract right now do not serve investors. They serve primary home buyers. And that's what I have been describing, is a house that I think now more than ever, it's been easier to get these creative contracts. And a lot of the reasons why, not the only reason, but a good reason why right now in this environment, is because affordability on those existing deals, those existing mortgages are high, where the mortgage is just slightly higher or at where rent is. When you see those opportunities or those deals, they are usually meant for people who are looking for a place for their family themselves. Like they're not necessarily looking for an investment. And they can deal with paying a little bit more because they don't have to cash flow. The two other exits that I believe work when you have like that arrangement is if you have a more premium rental ability. So if you're doing a group home or if you're doing co-living, and then those all have their own specific criteria. So it is getting a little bit harder to disposition these opportunities. And that's why we're pivoting to who we're serving. We're serving families that cannot qualify for traditional real estate or traditional mortgages. So just because you now learn how to do this does not necessarily mean that every deal is a deal. You have to really understand, what does that property and that debt structure serve? And then another one that's come up quite a bit recently, and I don't know if you see this, Justin, if a homestead buyer was living there and now it's a rental, there have been adjustments to insurance and to taxes, that property taxes. I had somebody call me and like, hey, I bought like 4 or 5 properties, I believe, in Houston, and all the taxes have gone up by over $1,000. I can't afford this anymore. They're no longer cash flowing. It's like, okay, you have to also understand the adjustment that happens when you're buying a property, even through creative means, that when it's homestead exemptions versus now being a rental, that there is an adjustment to taxes.
Yeah, folks, I think South Carolina is one of those where if you're non-owner occupied, there's a significant increase. There are folks who are senior citizens who don't have property tax. So you're looking at a PITI and they don't pay property tax, or veterans. There's so many little nuances. And I think that is the cause and effect of, we run fast and we don't read the fine print. And sometimes we get away and sometimes we don't. And sometimes we get kicked in the butt. And so Ingrid made total sense there, guys. That is a nugget. When you're looking in, just look at the fine print and look at the access we have to AI technology now. So guys, when you're looking at something, you can Google it too, but just research, what am I in for as an investor in the state of blank or the county or the town? I mean, even just doing that little bit of due diligence will help you. And that's the 5-minute prompt and read to save you from now, being underwater when they do a new assessment, or they see a sale price and the assessments are coming again. They're going to be coming again another round very soon. COVID, there was big time. I'm dealing with a property right now. They tax assessed this piece of land up here for $70,000. The owner's like, oh, I bet you I can get $100,000 for it. I just comped it. I'm like, it's underwater on the tax card. They're going for 50 grand. And I have to break the news, and then it just makes my job harder. But beside the point, they're coming again for these tax increase, so be prepared. But that was really good. What other nuances should investors be aware with? I think while we're on that topic, is there anything else you want to handle inside of that area?
Yeah, actually, understand that we're serving consumers. So when you're dealing with the consumer environment, they have certain protections. So just don't think that you can go and do this and not have any standards of operation, because if there ever was any issue that would come up legally, you're going to have to open up your books. You're going to have to open up your processes, and to make sure that you're not running your business in any predatory way. So part of not looking that way is to have standards. So like what I was mentioning before, we have a standard that says we verified your income, and it's household income. So it's not just a single person, but that's our standard. It's household income. They have to be able to make, 3x at least what that mortgage is that they're going to make. And that has nothing to do with running an RMLO. That is my company's standards, right? So that if I'm going to sell it to even a wholesale scenario, to a consumer, not to an investor, they have to be protected in all the ways I possibly can protect them. So that's important to know when you're doing these types of deals. You can't just willy-nilly this, because if you're ever in front of a judge, you're going to have to explain what your processes are, why this was a good fit at the time, and why you actually expedited this through that consumer in the right way. With the consumer protection laws that are out there, the two that I can recommend people to go catch up on is the SAFE Act and the Dodd-Frank Act.
Yeah.
Those two things have requirements. Like, for example, if you wrap a deal, you can't have a balloon that's less than 5 years. You're not allowed to. They're protected as consumers because they are not investors.
Yeah.
Things like
Real
that.
estate professionals are different. Investor to investor. If you're a homeowner selling to an investor, still got to watch. You got to make sure that you're T's across and I's are dotted. TILA, Truth in Lending Act, too, is another one from the 1980s that you have to be very astute to. So she named two. I just gave you the third. Definitely check up on just, again, ChatGPT, AI. It's super quick. Give me the bullet points. I'm telling you, as I've done it, and you will get the meat and potatoes of what you need. And then you go deeper on some of the topics that you might need. But just understand that you have to protect people and yourself. Ingrid, so is this website live? Do we have...
Yes.
All right. So, do we have to pull the curtain back? Dang, I thought you were going to tell us earlier. What is this website?
My bad. NoBankLoanHomes.com. So NoBankLoanHomes.com.
NoBankLoanHomes.com.
Yeah. So what I'm doing right now, I will say this is my team's website, and we're mostly in the Arizona market. The little tidbit I'll tell the audience is that Pace and I and another fella named Raz are working on a platform that's going to take this nationwide. So we were doing proof of concept, right? A good entrepreneur will do a proof of concept and make sure that things work out and the kinks, and like, what information did we not think about that we learned through the process. So we've been mostly focused on Arizona, but we plan to take this nationwide and have other investors have an easier time to participate. That platform right now, I don't believe is completely socially available, but it will be coming. So make sure that you're following me on Instagram so that when we go live and we announce, you guys have first dibs at taking leverage of that platform. My name is spelled with a Y, so it's INGRYD_Hernandez. There's tons of Hernandezes out there, so I'm sure you know how to spell that. But if you follow me on Instagram, we'll definitely talk about NoBankLoanHomes.com and then the new platform that's going to come out that is going to help other folks do this in their markets.
NoBankLoanHomes, plural.com. All right, guys, you heard it. You know Ingrid. You listen to her. She's on the podcast. She's a host. She's one of Pace Morby's top dogs. And she's always alongside there. She's always mixing it up, doing the deals, talking to agents. She has some other additional things coming out. So stay tuned with Ingrid, because if you're an agent or if you're around agents, you're going to want to get with Ingrid also, because she's dropping some wisdom and some knowledge. You guys are going to hear. She's going to be teaching you how to do more business as an agent locally in your market. So guys, you heard it. Thank you so much, Ingrid. It's been a pleasure. We went over a little bit of time today, but I think that's way okay, because this is great stuff and everyone needs to know about it. Guys, thank you for listening to the Get Creative podcast. I'm your host, Justin Tuminowski, and you just listened to Ingrid Hernandez. Listen to her, follow her, and check it out, realestateJustin.com. I'll see you on the next one. Peace.